Longtime Tesla bull Dan Ives over at Wedbush, friend of the show, is feeling a little less bullish on one of his favorite stocks. Ives cut his price target on Tesla to $1,000 from $1,400, but kept an outperform rating. Says Ives, quote, "We remain firmly bullish on Tesla over the long term, and our thesis has not changed. However, we have to reflect a new reality for Tesla in China with headwinds abound in a shakier macro backdrop." Ives also called out Musk's play for Twitter as a distraction that is starting to worry the Tesla faithful.
In this video, another Tesla bull slashes his Tesla stock price target, none other than everybody's favorite Dan Green Tidal Wave. It's Tesla's world and everyone else is paying rent, Ives. Plus, another Tesla bull suggests that Tesla should be doing some stock buybacks. I'll share my thoughts and opinions, so let's get into it. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks. Check out the links in the pinned comment below. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. You can also pick up some Tesla, Elon, and investment themed merch in the merch store, so check out the links in the pinned comment below, and thanks for your support. First up, Tesla stock today in a shocking turn of events, moving a mere 0.055%, a pathetic 39 cents per share. This is definitely the quietest day Tesla stock has had in recent memory. Still, in my opinion, looking like the bargain of the fucking century. Just a smidge over $700 per share in mid-2022. Nasdaq 100 today relatively flat, down less than 0.5%. Rivian, on the other hand, I'm not even going to mention the bell curve today, up almost 10%. Congratulations to all the long-term Rivian stock hodlers. Let's not do that one and everything will be fine. Similar story here for Lucid, whose shareholders appear to be anything but, up 11% today. Again, let's just not do this one and nobody will realize, let's move on. Google's parent company Alphabet today down over 1%. Amazon fairly flat, and ARK Invest flagship fund, the ARK-K ETF, up 4.5%. And now on to Dan the Man Ives and his reduced Tesla stock price target.
One of Wall Street's top Tesla bulls, cutting his price target on the company to $1,000 from $1,400.
Ives isn't messing around here. Almost 30% off, down from $1,400 per share to $1,000 per share. Can't wait to hear Dan explain this one.
Dan Ives is Wedbush Securities Managing Director of Equity Research. He joins us on the Squawk Newsline to explain his call. I guess, Dan, it's not as simple as seeing a stock that's breaking below 700 when you have a $1,400 price target. You normally wouldn't have a 100% appreciation. I don't know how long your price target. I don't know what the duration is, but it just seems I've seen a lot of analysts just do that when they're wrong about which way the stock's headed, and they lower it just so they don't look ridiculous with what they're on record for. But you've got a rationale here based on China.
Yeah, and that's never been our DNA. I mean, look, it all comes down to China. China is the key part of our bull thesis in Tesla. And really, I'd call it an epic disaster, what we're seeing so far for the June quarter. I think for deliveries as well as production on the zero COVID issues, deliveries are going to be soft. And I think the trajectory is going to be a lot slower for the second half of the year. And that's why we're lowering the price target, cutting numbers. And clearly, I think at least over the coming few weeks, it's some darker days ahead for Tesla in terms on the delivery side.
Now, admittedly, Shanghai production will be a lot softer than you would have expected without the futile, fascist and inhumane shutdowns from the Chinese government. They're attempting COVID zero. F***ing idiots. But I personally think this may be a massive overreaction from Dan Ives here. Of course, in the short term, as Ives points out, in the next few weeks, softer production, especially out of Shanghai. But it won't be too long before Shanghai is ramped back up to peak capacity. And remember, we already know that Shanghai is massively expanding. It won't be too long before Shanghai has production capacity per year of about 2 million vehicles just from China. So short term, yep, soft production out of Shanghai, no questions there. But this does seem like an overreaction to me. Now, of course, I'm sure Ives is also factoring what's happening with the macroeconomic environment as well. But I really do think this is reactionary and a little bit over the top.
Now that I recall, we had Munster on earlier, and I guess he said his price target's $2,500 for Tesla. Your bull case on Tesla, even if the $1,400 or $1,000, where it is now, is in large part a story about China.
China's the hearts and lungs of the Tesla story, and we were optimistic, that they were going to be able to navigate some of these issues better than expected. But everything we've seen over the last week, makes us a little more negative in terms of June as well as second half. And look, we call like we see it. and we're still bullish on Tesla in terms of the long term. But then look, you combine this with the circus show that we're seeing with Musk and Twitter. It's just been, really a Category 5 storm for investors in terms of feeling like Musk is essentially out to lunch at a time that Tesla ecosystem has never needed him more in terms of the supply chain issues in China.
Personally, I think this storm will blow over a lot sooner than most people are expecting. Perception versus reality, two completely different things. I totally agree with Ives here. The perception at this point in time from many Tesla stock investors, oh my god, the stock's down, oh my god, Shanghai shut down, oh my god, he's been into it on Twitter. This is what's happening in the minds of many Tesla shareholders. So Dan has a point on this matter. However, just a few hours ago, Elon clarified what should be obvious, but a lot of people don't seem to quite understand. This tweet from Elon Musk, quote, "To be clear, I'm spending less than 5%, but actually, of my time on the Twitter acquisition. It ain't rocket science, by the way. Few humans on the planet are more able to appropriately use this comment than Elon Musk, who, by the way, if you don't know, self-taught rocket scientist, like literally. Shout out to SpaceX. Yesterday was Giga Texas, today is Starbase. Tesla is on my mind 24/7. So it may seem like below, but it's not true. And meme here, Twitter, Elon, Tesla. I think a lot of people who don't think too much see a few tweets and assume, oh, the tweets are in proportion to Elon's time being spent on each project. Well, spoiler alert, when Elon Musk is in the middle of an extremely important engineering meeting at SpaceX, he's not out there tweeting, hey guys, I'm in an engineering meeting at SpaceX trying to figure out how can we make more of these engines cheaper. Get it? Same shit for Tesla. So the public can get a very distorted view of how Elon is spending his time and more importantly, his mental energy. As he points out, this Twitter deal, it really isn't rocket science, as I mentioned in previous videos. The changes that need to take place on Twitter, Elon could describe and then hand off to capable software developers in a short email, a single page email with a few bullet points and very simple instructions. It's not that difficult. The good news is, at least for savvy investors, if the stock market thinks one thing and is panicking, oh my god, Elon's spending his entire day thinking about Twitter, dumping Tesla shares, and by the way, macro environment's also having an impact. The reality is quite different. At some point, people figure this out. The deal either proceeds or Elon walks. Things get back to usual, and between now and then, starts with op and ends in opportunity, in my opinion. And now onto a Tesla stock buyback. We have a tweet here from what I believe is Tesla's third largest individual shareholder, Musk, Ellison, Leo. Tesla must announce immediately and buy back $5 billion of Tesla shares from its free cash flow this year and $10 billion from its free cash flow next year without affecting its existing $18 billion cash reserves with zero debt. Gary Black responding to this, Leo is 100% correct. With Tesla free cash flow of $10 billion in 2022 and $20 billion in 2023, after capex for new gigafactories of $7 billion in 2022 and $8 billion in 2023, stock buybacks of $5 billion in 2022 and $10 billion in 2023 are far superior to letting cash build on the balance sheet at a 2 to 3% ROI. You can see Gary's projections here, Tesla's non-GAAP income, blah, blah, blah. What we're looking at here, free cash flow, bottom line, 2021, 2, 3, 4, and 5. Long story short, and I totally agree with Gary here, Tesla's going to be printing stupid, and I mean stupid amounts of money. I mean, they already are. But the stupidity goes from stupid to absurd to just absolutely ridiculous real fast. Black is estimating that in 2026, Tesla's going to do about $67 billion in free cash flow. And as I tweeted out, quote, hard to argue with stock buyback unless Tesla knows or suspects they will have an opportunity for insane capex to go after a huge opportunity we've yet to hear about in the next few years. And I want to clarify why the next few years. Well, as I mentioned a moment ago, Tesla is close approaching a point where it seems almost impossible that they'll ever be able to find ways to spend all their cash. And I know impossible and ever big words, but by the end of this decade, give or take, Tesla could easily be doing $500 billion in free cash flow every year. How the fuck are they going to spend that? I expanded on this a little bit more in a tweet thread, so we're going to run through that now. Sawyer Mero pointing out that Tesla is already going as fast as they can. They're already spending as much as they see fit, blah, 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 blah. So let's run through this. First, Tesla is accumulating cash at a significantly faster rate than they can currently spend it. R&D spending, as in research and development spending, is already maxed out. They can't spend any more. They're spending as much as they possibly can. The same for CapEx. Tesla's building everything they can as fast as they possibly can. Tesla has enough money to literally build another half dozen gigafactories today, but they can't because they haven't secured the supply yet. Everything is maxed out and the cash pile keeps growing. Tesla has close to $20 billion of cash just sitting around today after spending everything they possibly can. And Tesla's rate of cash accumulation is increasing at a staggering rate. The only reason it makes sense for Tesla not to begin share buybacks with some of their cash is if they know or reasonably suspect that they may have a ridiculously large opportunity looming that will need insane spending. Example, I don't know, just build a gigantic robot army, as in not to sell to customers, but for their own needs. That could be a huge capex investment. Maybe build their own in-house robotaxi fleet. In other words, they build the vehicles and they don't sell them to customers. Again, pretty heavy upfront capital costs. But even then, I still can't see them spending everything they've got. Another option, of course, is if Tesla can see some feasible ways that they can actually solve their battery, material, and supply constraints. Maybe they go berserk buying some mining companies and so on. But even then, they're still not going to be able to spend all their money. Obviously, Tesla needs to account for unknown unknowns, as in just because they can't think of a way to spend the money now doesn't mean that in the future, a new opportunity may not arise. So you've always got to factor that in. So Tesla obviously needs to keep some money aside for those. But as I said, Tesla's free cash flow is growing at a stupid rate. They can't spend it all today. Just imagine when it's 10 times, 20 times, or 50 times higher. And yes, these are all realistic outcomes in the future. Shout out to my Tesla price targets and more importantly, my valuation model available exclusively on Patreon at the investor supporter level and above. So in my opinion, Tesla stock buybacks are the best use of extra cash at the moment. And again, I want to be really clear, extra cash above and beyond what they know they'll need, plus a safety net there for unknown unknowns. If anyone has better ideas than Tesla stock buybacks, I'm all ears. We really need to start scraping the bottom of the barrel in fairly ridiculous ways to find ways that Tesla can spend their current and future cash flows. An example, maybe some chip fabrication plants. And again, I'm not suggesting this is a good idea or appropriate yet. Maybe one day in the longer term it might make sense. For those who don't know, for chip fabrication, you're talking about an investment of 2, 3, 4+ billion US dollars for one plant and a huge lead time to get up and running. Again, I'm pointing out you have to really scrape the bottom of the barrel and get pretty ridiculous to find ways Tesla might be able to spend some of their cash other than stock buybacks. And here's an absolutely ludicrous idea, and again, it's not feasible yet, but in a few years' time it actually would be. Tesla could just buy an entire gaming company, the silly example here is Nintendo, and then use that for Tesla gaming. Maybe some mining companies as well, but this is the point. You see what I mean? You really have to start getting ridiculous, really out there before you can find ways for Tesla to spend their cash. In a perfect world, Tesla will always find ways to spend almost all of their cash, but they are so capital efficient and scaling at max speed already. They're also printing stupid amounts of money and have fingers in so many major pies already. And I know some people will ask, what about acquiring companies? To be honest, besides mining companies to secure materials, maybe to speed up the process and so on, there are very few companies that actually have anything of value to Tesla besides talent, aka people. Tesla is already industry leading in literally everything they do. And the truth is, the world's best talent already wants to or already works for Tesla. So I ask again, what should Tesla be spending their money on? Maybe I have a lack of imagination, but stock buybacks seem the only choice unless Tesla knows something I don't. Now, just between us, I actually wouldn't mind Tesla acquiring the Boring Company, STAT. The sooner the better. The valuation of the Boring Company obviously will continue to increase over time. Today, it's just a few $1 billion. Why not acquire this company? The synergies, Tesla, the tunnels, it makes perfect sense. Although I rate this relatively unlikely, I would like to see this happen. But after that, bro, start buying some stock back, dude. Gary Black puts things in perfect perspective here. Quote, think of share buybacks of $10 to $20 billion per year as slowly going private over time. Whoever doesn't sell their Tesla shares winds up as a sole owner of Tesla. This is a great way of thinking about things. I'd love to know what you guys and girls think. 1. Should Tesla begin share buybacks? And 2, if not, what the fuck should they be spending their cash on? Like seriously, what is your best guess? Your crazy ideas? Anything, please leave it in the comments below. Obviously, crowdsourcing this, we might come up with some great ideas, maybe even be able to pass those on to Tesla. But at this point in time, call it a lack of imagination. But I cannot reasonably conceive of a situation in which Tesla shouldn't be buying back some of their stock year after year after year until things change. So I hope you guys and girls have enjoyed the video. I won't be surprised if we see more Tesla stock analysts, bulls and bears cutting their Tesla stock price targets due to short-term temporary concerns that make zero difference to Tesla's long-term execution. Between you and I hope that this causes Tesla stock to get absolutely crushed irrespective of what the macro environment's doing, because I'm still loading up with every spare cent. Lastly, don't forget you can join Patreon with the card in the corner, link in pinned comment. You'll gain access to my Tesla stock price targets at the investor supporter level and above. You can access my full Tesla stock valuation model, plus all supporters at all levels get access to well over 100 exclusive Q&As, dozens of other exclusive videos, loads of content and perks. Oh, and by the way, make sure to get your questions in for the next exclusive Q&A in the next few hours because I'll be recording it soon. So, see you over there. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.